For those who, Larry, who believe that the status quo is where we should be, in other words, keep the blockade on, they keep the Straits of Hormuz on, and we try to ride this out because Iran will eventually collapse. If you look at the facts, it is solely the case that eventually, with that blockade on, denying 80% of the revenue that Iran gets is no longer theirs. That is a fact. Eventually, there would be economic collapse.
President Trump is preparing for an extended blockade of the Strait of Hormuz, and the economic squeeze is working as the Iranian conflict reaches the 60-day mark. But the question remains, how long can Iran hold? Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Brenberg, and with us for the hour, Making Money host Charles Payne. The strategy of Operation Economic Fury is clear: economic pressure while keeping military options on the table. According to the president, the Iranians better get smart soon. Gulf states and the United States have jointly rejected any Iranian claim to control the Strait of Hormuz as its inflation surges, the currency is tumbling, and the Iranian regime nears a critical oil breaking point. Oil prices jumping on a fear of a prolonged blockade, and the U.A.E. now set to leave OPEC on Friday. A ton of news when you think about it, Charles. And we're watching the market reaction to this is muted, but oil over $100 a barrel. I was gone for a couple of days, and that's happened now. I don't like that. Yeah. I understand what the president is trying to do, but how long do you think he's going to hold?
Well, first and foremost, no more holidays for you until this is over.
Okay, fair.
Okay. Next thing you know, oil's at 80. Jackie's gone, back over 100. But, you know, it's General King was on to the fact that it's an attrition, right? Us versus them. Who can hold out longer? Who's got, you know, we have a great American economy. We have our own oil supply, even though, of course, West Texas Intermediate's up as well. But it's probably the best alternative, particularly for folks who didn't want boots on the ground, right? Which would still be a long series of fights, or we have to win this thing. I think the most important part of the read was the neighbors, Iran's neighbors, wanting to be a part of this. I will admit, though, I was confused yesterday and even a little bit today when U.A.E. leaving OPEC and crude oil going higher. They've got they've got much more capacity. They've made big investments into their oil infrastructure. They are going to pump when they get a chance. And when they start to pump, let's not forget, Qatar quit OPEC not long ago also. So when they start to pump, others are going to say, we want to pump. And we know economics 101, more pumping should bring the price of oil down, maybe faster than it would have come down anyway once this is over.
Yeah. So I was thinking about that when I saw that news yesterday and thinking to myself that the oil price over 100 might more be related to the fact that there's continued tension. This is an ongoing problem. I actually agree with you 100%. This U.A.E. departure, Brian, makes OPEC essentially feel irrelevant. This has been coming for quite some time. And that only, I think, was able to happen with the United States changing the dynamics in the oil game. But you see the members of the cartel saying, we don't have to listen to Saudi Arabia. We don't have to listen to, you know, this crew anymore. We're going to do what we want to do. The United States is doing what it wants to do. That's a game changer for oil.
I read it that way, too. Now, I think Dagan and Mike Lee made the point yesterday that other nations have left OPEC before this. So there are reasons apart from Iran for leaving. I still think a lot of this has to do with President Trump going to the Middle East, making friends with these guys, showing them another path. I think it's great for oil. Charles, I share your view on why didn't that have more of a downward effect on oil prices. I think it's because it basically came out around the same time that President Trump was signaling, I'm not ending this blockade. Right. This blockade is going to stay. And I like the blockade. I think it's super effective. It is crushing Iran. And you laid out some of the reasons, devastatingly crushing them. But the problem is it's not yet a blockade where the good guys can get their stuff through. Nobody gets their stuff through. When it becomes a blockade where the good guys can go through and the bad guys can't, then I think we're in a great place.
Well, that's controlling the strait. Then essentially, you get back to the original part of this whole thing, the linchpin to the whole thing is controlling the strait.
And I've been everybody I could talk to. I ask them, when does the blockade become good guys going through? And they say soon. It's coming. It's coming. Man, I just want to see it happen because 104 oil is not good. And I don't think it has to stay there, but I don't think it meaningfully moves down until we not only control the strait, but we usher through whatever we want.
I hear you, and I think that really would be the most important thing. When that happens, I could speculate and say, I imagine it would be when this regime crumbles internally a little bit more. And a couple of the signs that are important, the oil storage getting full, Dagan, you've made the point that once the storage is full and you shut these wells, you create damage where you can't keep pumping. So that's a long-term problem for them. But this currency problem and the economy that the regime is facing, with the fact that it's locked off from the revenue being able to go through the strait along with everybody else, as you point out, Brian, creates a situation where they just may not be able to make it more than a few more weeks.
So, Taylor, do you want to take this? Or
I'll give it to you. I don't want to
Wait,
steal
can
your
I guess
thunder.
what you guys are both scheming about?
Yeah.
We're not
You're,
scheming.
no,
We're
you're,
not
you're always
scheming.
scheming. You're schemers. You're scheming about.
That's one. I'm fine
You're
with it.
scheming about oil inventories in the U.S. Is that what
No.
you're scheming about?
No.
You're not.
No.
All morning I was thinking you were going to scheme.
Okay,
fine.
maybe someone
Go.
tell us.
Go.
Okay.
Fine.
Javier Blas at Bloomberg wrote a very long column about the Iranian oil industry is not about to explode. And he used the word explode because that was a word that President Trump used. And I'll give it to Javier Blas. He might have an opinion about President Trump, but his analysis has been deeply unbiased and fact-based. What he is saying is that the U.S. has kind of, and this is my word, has misjudged how much storage capacity that Iran has had so far, and that using Kepler, the commodity intelligence firm, says that Iran probably has another 12 to 22 days of storage available, and that's far more than the U.S. administration anticipated when it started the blockade. And also, and I will not get into the nitty-gritty, but due to the nature of the oil fields and their maturity, that shutting them down will not, they have experience in Iran shutting, kind of throttling wells and restarting them. It will not do the damage to the Iranian oil wells that some people think. And I will just read this quote because it was kind of hilarious. The Islamic Republic won't wait until the last minute. Instead, it will preemptively slow production before it runs out of storage. Engineers prefer to gradually throttle down wells rather than shut them suddenly. But he gets into people have kind of misjudged the they're just misunderstanding the industry in Iran by using Claude and artificial intelligence, and then repeating the same incorrect information over and over again on social media.
Okay, I'll add something to that then. If we take that as something to really think about and how much longer this could go. We've also been saying here that the economy has been stable, the market's been performing, inflation hasn't materialized. I was talking to the CEO of a plastics company. Main input of plastic is oil. Oil prices are going up. And he says, we've worked through our inventory at the lower prices. Now is when you're going to start to see the higher prices, and that will come through in prices to consumers, and that will come through to the inflation number, Taylor.
Yes, maybe in second quarter and third quarter. To offset, though, that we're going to be getting tariff refunds. And that could immediately juice the bottom lines of these companies. So can they use the tariff refunds to offset the higher prices and keep margins stable? Just throwing that out there. Dagan's nodding her head. I'm just thrilled that Brian did a pop quiz and he lost.
Yeah.
I love that.
No, I was preempting a point that you were probably going to make, so I can't make it.
Let me talk about another, because you talked about the economy. Jackie, time is on our side. Holy smokes, did you guys see the durable goods orders and the capital goods orders? It's almost as if the big, beautiful bill was timed perfectly. Take a look at this with AI. So we had, first of all, 3.3% jump in core capital goods orders in March. Domestic manufacturers of capital equipment are beginning to step up. Driving the gains in March, orders for computer and electronics year over year up 14%. Computing demand, you need the machinery, and orders for machinery are up 12% year over year. So the time on our side, Jackie, is that we are an economy that for now, and we'll talk about earnings later that have been good, firing on all cylinders when you think about the investments that we're making in AI, the data center construction. We're good for now. Now, Atlanta Fed GDP is low. It's like, what, 1.2?
Yep.
But that's because these numbers, I don't think, are factored into GDP yet. So I want time to see if this is factored into GDP. I caveat my notes that I don't like stagflation. Markets don't like stagflation. I think on average, markets are down 10% if you get low growth, high inflation. Not the base case scenario, but just something that people are talking about. But for now, that durable goods orders this morning kind of blew me away in terms of like, we're okay, we can outlast this when you think about the domestic economy.
Okay.
I said this probably last week. There are only two things keeping the economy chugging, and it's the infrastructure spending on AI and then government borrowing and budget deficits. And that was part of the equation, was the refund checks, which we had to borrow money to give stimulus to corporate America to pay back the tariffs. And that was Supreme Court decision, but still, it's a stimulus check
Just really
to
quick,
those who don't need it.
before we get to earnings, Charles, I want to ask you how long you think this market will hold as the two sides are jockeying here, because sometimes markets can be very fickle, and it just takes one thing to trigger. What's the appetite?
It's a great question, because we're sort of in uncharted waters here. Because, one thing I showed on my show yesterday was really intriguing. This V-shaped recovery in the stock market has caught almost everyone off guard. Even if you were bullish, you're caught off guard, like, wow, But this is the biggest jump we've ever had since 1957 for a rally that wasn't born out of recession. Why is that important? Because recession, everything goes down and then we rebound. Right now, everything didn't go down. So we're already well ahead of the game. So you have to anticipate some consolidation. You have to anticipate some pullback. And so, and it could coincide with headlines,
Right.
And so, yeah, we anticipate some of that will happen. We'll pull back a little bit. But I think people should be focused on how quickly it happened and knowing that it can happen like that again when the coast is clear.
Well, Taylor's chart of the month, I'll call it, really pointed that out. When you bottom out and then you come up, and we've seen it happen historically. It did happen quicker, it seems, this time. You've made that point. But you're also looking at some of the tech names that we're watching.
This is our Super Bowl.